Where are we in the cycle in the United States? And are you worried about the debt in this country? Tell us how you use the template to look at the happenings right now in the U.S., the fiscal position.
The most important thing about, I guess, the template is first it creates a framework for this deleveraging, but also it gets down to the nitty-gritty of who is the buyer and who is the seller. You have to know, in our anticipation of the European debt problem, there was a lot of talk by policymakers, a lot of people, that there was this, if I can keep the markets having faith and confidence, everything would be fine. That was not correct. If you actually knew who the buyers of the financial assets were, their confidence had very little to do with the decisions or the amounts of money that were being provided. For example, the banks. The banks, you can give banks today, or in these various places, you can give them all the confidence in the world. They can't expand their balance sheets. There's limitations, and they have to contract their balance sheets. So knowing who the buyers are and what the motivations of the buyers is very key to making that decision. And I give the example of Japan, because when you're looking at the United States, the Japan example, I think, is a very good example. Japan has total debt to GDP of about 500%, and it has government debt to GDP of about 270%. So it is way, way, way more leveraged in a sense than the United States is. And so then the question is, as we go through this, the magnitude of monetization. You have to go back to say, who are the buyers of the debt and what are the motivations? There is a greater fool theory. The greater fool theory can go on for a really long time. The timing of when that shift takes place is very much dependent on that. So as we look in terms of, let's say, the United States, certainly it's the case, and in Japan, certainly it's the case that we can't support these kinds of debt. So anybody with a sharp pencil will know that we're not going to be able to support that. That doesn't mean there won't be adequate buying, just like in Japan's case. You can have plenty of buying. You provide enough liquidity, and the question is, what are the choices? So the big shift in terms of going to the notion of what do I do with my money. Let's say you have a lot of liquidity, and the world has lots of liquidity. Today, the world has lots of liquidity. The question is, what are its choices? And what do those choices look like? And then you put your money. So you produce a lot of money around, a lot of liquidity, and then say, do you stop buying U.S. bonds when you have, or do you stop buying Japanese bonds when you have no interest rate and a currency risk? And so when do you stop buying? Well, it's when you have confidence in some, ultimately when it's driven to something else. At some point, you get a move toward inflation. If there's a move toward, like, I want to hold inflation assets, then you come into problems. Until you don't have that move to move toward inflation assets, you have a capacity for a lot of the buying there, and so the timing. So this could go on for quite a long time, because you have to go back to the buyer and you say, who is that big buyer? We know who the big buyers are of U.S. Treasuries. Okay?
China.
So we know who the big buyers are. And then you know there's. Look at their choices. Look at their, their preferences.
Not a lot of alternatives.
So there are all of those. So these are it's not sound finance. And when we talk about our budget, we're also not talking about, the non-liability, the social, the pensions, the other liabilities that exist. We have a lot more promises than we can keep. But the timing of that very much depends. That can go on for a long time. So there's a lot of dynamic between now and a problem, just like Japan can go on for a very long time.
So should we be worried about the $16 trillion debt in this country, knowing who the buyer is and knowing that this country has an ability to print money?
I think we have to worry about getting the balances of dealing with these right. It's the same thing. There needs to be a certain amount of austerity. There needs to be, but if that austerity is too much, we have to worry as much also about the social consequences. We cannot have a downturn, a bad downturn. So in worrying about the debt, yes, we have to worry about that and we have to balance that correctly. But we have to balance that in a way that does not produce another 2008, because if you have a downturn, then you're going to have social consequences of the rich and the poor at each other, and then also the possibility of doing crazy things. And then the political shifts become meaningful. You know, Hitler came to power in 1933 because it was the bottom of the Great Depression, and democracies have a challenge in terms of making effective decision making. So I think that you have to worry about getting the balance right. Right? So the fiscal cliff next year is also something to worry about. So we can't just worry about too much debt. We have to worry about too much austerity. We have to worry about getting that balance right. And my biggest worry is that people are not, policymakers and a lot of people are not doing that with a sharp pencil. In other words, they just talk. It's just a calculation. You could do the calculations. There's a certain amount of spending. Nominal GDP and real GDP is a certain amount of spending. Okay, who are the buyers of goods and services? Where did they get their money from? And then how much do they need? And so it's with a sharp pencil, you could deal with that, but it's more with slogans. And so I'm worried about balance.